Guys, this is S&P 500 weekly technical analysis for the week of June 2nd. Now the S&P 500 has entered into a critical phase wherein either it will move up to or beyond the all-time high that was 6147, or it will enter into the reversal. The most important and the biggest reason is the confluence zone that is present here in the bull side. And in last 3 weeks, the S&P 500 has failed to regain or recover or to sustain and close above the zone. So even though yesterday the S&P 500 managed to save itself, but the MACD, the technical indicator, moving average, convergence, divergence, and the stochastic RSI has come into a condition, a bearish condition, wherein this is going to exert, or that this is going to put bearish pressure on the S&P 500 and the Dow Jones, and in a manner to the entire US stock market. So I will discuss all of this in detail in this S&P 500 weekly technical analysis. Now before I discuss the weekly chart, let me tell you that why the S&P 500 again and again has sustained and managed to recover rather than giving a very heavy fall or a good fall. Because the same is going to help the S&P 500 in the next week also. So in my previous S&P 500 weekly technical analysis, I have mentioned that the S&P 500 will get a gap up open on Tuesday, on 27th of May. So there was a good gap up open. The most important part of this gap up open was that it opened within the zone. Within the zone means the zone that starts from 585x. So in my pre-market analysis to my Patreon community members, that the open equal to low condition will allow a movement towards 593x, because as long as it is holding and sustaining above the zone, above this strong zone that starts from 585x, then the movement will be towards 593x. So if that was the case, then why the S&P 500 has failed on Wednesday? Because the high on Wednesday was 5940 and the low was 5882. The reason was the FOMC minutes of the meeting. So this is what I have mentioned to my Patreon community members even in the pre-market analysis, that until 2 p.m. Eastern time, the S&P 500 is expected to give very limited movement and will keep on trading between 590x and 593x. And in the bearish side, there will be some possibility if the S&P 500 fails to sustain at 590x, then there will be some possibility for the 588x. And then Nvidia posted better than expected earnings. And then at the same time, there was a news that the court has overruled the tariffs. So that was the reason the next day on Thursday there was a heavy gap up open, but still after getting this heavy gap up open, the S&P 500 failed on Thursday. Okay, in the first update I mentioned that there are many conditions which are indicating that the SP500 is under pressure. This means that intraday we can see a fall or a heavy fall. But even in case of the heavy fall, the zone that starts from 585x will be able to help the S&P 500 to hold and sustain. Then came Friday. Within the first hour, got a reversal. In the second hour, in the third hour, it came down to the zone, sustained. So again and again, the zone that starts from 585x, it has played a very important role and has helped the S&P 500 to sustain. Otherwise, this was not possible. That is why in the midday update to my Patreon community members on Friday, again and again I mentioned the zone, that no heavy fall or nothing can happen as long as S&P 500 is holding at the zone. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now guys, let me tell you very quickly that I have divided this S&P 500 weekly technical analysis in three parts. Okay, first part is the weekly chart. Second part is the daily chart. Third part is the probable movement. Okay, So in the first part, I will discuss the weekly chart section. Weekly chart means the big picture, the long-term trend, etc. I will analyze the chart technically and I will tell you what is going to happen. Okay, because for now the weekly chart is supporting a bullish movement, or if not a bullish movement, then a sustained movement. Second part is the daily chart section. Daily chart section means the short-term picture. As I mentioned, the MACD and stochastic RSI are now bearish. This means that bearish pressure in the short term is expected. So I will show you the technicals and I will tell you how it is going to work. Third and the last part is the probable movement of the S&P 500 from June 2nd, which is Monday, through June 6th, that will be Friday. So I will tell you how the S&P 500 is going to behave, whether there will be a bullish movement, bearish movement, or first bullish then bearish, or bearish bullish, etc. I will discuss these conditions. And guys, if you are new to my channel, then let me remind you that all of these three sections are interrelated or interconnected. Okay, so when I say the probable movement, this means that 30 to 40% of the probable movement I will discuss in the first part and the second part. So guys, now I'm going to discuss the first part, and here I will do the technical analysis of the S&P 500 on the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay. Now a very important thing is happening and is going to happen next week, will be very decisive. Okay. So before I tell you about this, the very decisive thing, okay, and how to recognize this, let's first analyze the candle. Now this is the last weekly candle is a simple or normal green candle. There is no open equal to low or no open equal to high condition. Okay. Secondly, it is not a sandwich pattern that I have mentioned in the last week, because for the sandwich pattern to be seen or to happen, there must come a heavy bullish candle that must cover the low and the high, or at least the entire body of the candle. So what does this mean? This small bullish candle simply means bullish sentiments, that's it, nothing else. And allows an initial or intraday bullish movement on Monday. That's it. No gap up open, no gap down open, nothing as such. So now when you look into this, the last weekly candle of the Dow Jones, again the same candle, a normal bullish candle, no open equal to low condition, no open equal to high condition. So technicals are also normal. Okay, fine. So in this manner, again an initial or intraday bullish movement on Monday through this, the last candle. That's it. No gap up, no gap down, and nothing else. Okay. Now let me tell you that most important part here. Okay, in the S&P 500. Okay. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now the most important part is this, the expected crossover, the bullish crossover in the moving averages. Now why this is the most important thing? See, there is a reason. So now let me take you back to the 2022. Okay, this was March 2022. Okay, exactly a similar kind of condition was seen when these two moving averages were so close that at one point of time, okay, it was kind of confirmed that there will be a bullish crossover in the moving averages. But then what we have seen, back to back, these are red candles, and this has formed a bearish slip. And after the formation of the bearish slip, we have seen around 15% fall. Okay, that time also it was a beautiful trap. Okay, so now what I'm trying to say here is that, so in the present case also, it is now almost confirmed that if there comes a normal green candle, see, a green candle of any kind, okay, or a normal red candle like this red candle, okay, then also there will be a confirmed bullish crossover in the moving averages. And once there comes a confirmed crossover, bullish crossover in the moving averages, then this will change the scenario, this will change the picture, because in that case the S&P 500 will enter into the bullish trend. And this will not be the short-term bullish trend, this will be the long-term bullish trend. Okay, and once it enters into the long-term bullish trend, then there will be very heavy probability that it can test and hit its previous all-time high, that was 6147. But for this to happen, okay, the confluence zone is there. The S&P 500 must clear the confluence zone, otherwise nothing will work in favor of the S&P 500. Okay, in that case, even if there comes a confirmed crossover, but if the S&P 500 fails at the confluence zone, then just after one bullish crossover, the market, the S&P 500, the Dow Jones, the entire US stock market will be compelled to give up, okay, or to come down. And then immediately in the second week, okay, this can happen. However, chances for this to happen are low or are less than 20 or 25%. Okay, because this is a very rare scenario that seeing a change in the moving averages immediately after 1 week. Very rare scenario. Okay, but this can happen only through a very heavy fall, extremely heavy fall, like 5 to 6% or more than that. However, when you look into the Dow Jones, okay, there is no such urgency. Dow Jones is trading, okay, well, in the bearish side, neutral but bearish. Okay, and this means that even if the S&P 500 gives a bullish crossover and Dow Jones also moves up, but Dow Jones forms a slip, okay, in next 1 to 2 weeks or 3 weeks. In that case, wherever the S&P 500 will be, that will be the high, and then S&P 500 will have to give up because of the bearish slip in the Dow Jones. Okay, but it will take around 2 to 3 weeks, and if the S&P 500 gets a bullish crossover in the moving averages, then it will get 2 to 3 weeks of time to move up and to remain bullish or to trade bullish. Now let's analyze the technical indicators so that we can get more clarity here. In terms of the technical indicators, the S&P 500 is bullish through the Bollinger Bands on the weekly chart. The S&P 500 is bullish through the Ichimoku cloud on the weekly chart. The S&P 500 is neutral through the moving averages on the weekly chart. The S&P 500 is confirmed bullish through the MACD. MACD is moving average convergence divergence. So the S&P 500 is bullish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart. In this manner, the S&P 500 is almost bullish. It is almost bullish. Okay, but still I will keep it as neutral and bullish. Neutral and bullish, but not absolute bullish. Okay, because there is still no clear confirmation of this the crossover in the moving averages. Let's analyze the Dow Jones. Dow Jones is not good. Okay, last time also in the last week, the Dow Jones was trading bearish. Dow Jones is neutral through the Ichimoku cloud. Dow Jones is bullish through the Bollinger Bands on the weekly chart. Dow Jones is neutral through the moving averages on the weekly chart. Dow Jones is now bullish through the MACD on the weekly chart. Dow Jones is bullish through the stochastic RSI on the weekly chart. The good thing is that in the last week, the Dow Jones managed to get the bullish MACD. Earlier, MACD was bearish. So now Dow Jones is neutral. Okay, neither bullish nor bearish. So this is a relief, okay, for the Wall Street, that the Dow Jones is now in the neutral condition. S&P 500 is already in the neutral and bullish condition, okay, on the weekly chart. This means that unless there comes a very bad news, okay, so when I say a very bad news, okay, what can that be or what will that be? Okay, now this is very obvious. This bad news, okay, will be only and only from the president himself if he says, okay, something related to the tariffs, okay, especially related to China or so. Because other than him, see, there is no specific event, no earnings, nothing is planned, okay, for the next week. This means that the only bad news that can happen or that can come, okay, will be from him. Otherwise there will not be any bad news. It will be only, okay, all of this will be the good news. Okay, in this manner the S&P 500 is neutral and bullish, or the S&P 500 in terms of the numbers, the S&P 500 will be seen or considered as 70% bullish, okay, but still neutral. The Dow Jones is neutral. It is 50-50 neutral. It is not 60-70. It is just neutral. However, as early as on Monday, okay, immediately after the open of the stock market, okay, this picture will be very much clear whether there will be means how much chances are there for the confirmed crossover in the moving averages, or if there are any chances for a fall, etc, etc. It will be very very much clear, okay, in the first half on Monday itself. And if you're my Patreon community member, okay, then in the pre-market analysis, okay, before the open of the stock market, I will tell you, okay, if there is some confirmation, else in the comment post or in the midday update, okay, it will be very much clear. And guys, if you also want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. And guys, it is not just about these the daily precise updates which I give to my Patreon community members every day, Monday through Friday, but I also give the stock market opportunities in the premium stocks of the US stock market. Top 30, 40 companies of the US stock market, the blue chips. And that's not all, because I also give this the S&P 500 midweek update. This midweek update is a video technical analysis just like this weekly technical analysis. So guys, whenever you want to join my Patreon community in order to get the daily precise updates every day from Monday through Friday, then I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And when you scroll down a little, then you will see that there are these three levels. Okay, this is level 1, this is level 2, this is level 3. The level 1 and level 2 are same. The only difference is the geographical location. And when you participate in either of these, the level 1 or level 2, then you will be getting all midweek update videos, the daily SP500 analysis, updates, movement, levels and zones, everything. And the stock market opportunities minimum 5 to 10 every week. And guys, this level 3 is very very special. Why? Because whatever you are going to get here, you will get everything by default in the level 3. But other than this, you will be getting one Zoom video meeting. In this Zoom video meeting, what I am going to cover, so I will tell you the entry and the exit secrets, then one premium hack. Okay, this hack works almost 100% of the times with almost 100% accuracy, and you might not have seen or heard of this hack. Then the one trading or options strategy, again this is option strategy, it works with almost 100% of the times with almost 100% accuracy. Okay, then the modified technical indicators, then the options premium calculator. Okay, so as you know that 97 to 98% traders, they do not know how to calculate the premium value of the option, and this is the primary reason for the losses. So here I will tell you that how to calculate the options premium value, okay, the past, present and the future. So I will cover all of this in the Zoom video meeting. That is why it is very very special. And guys, let me assure you that when you participate in the level 3, then you are going to get much more than what you can expect or what you can anticipate. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday of the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire stock market, entire US stock market. So guys, whenever you want to join my Patreon community in order to trade safely and confidently, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. So here I will do the technical analysis of the S&P 500 on the daily chart. Okay, so daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Now let's first analyze the candle. So this is the last candle of the S&P 500. If you notice, okay, there was a very heavy intraday reversal, and at one point of the time S&P 500 was in a condition wherein it would have come down heavily, but the zone that starts from 585x, it has helped the S&P 500 to hold, sustain, and then 1% intraday reversal. That is why in the midday update yesterday on Friday, again and again I mentioned the zone, that the zone is there. There will be a natural support to the S&P 500. For a minimum of 2 to 3 hours, the S&P 500 can hold and sustain at the zone. And as long as it is holding and sustaining above the zone, then in that case there will be a possibility of seeing the movement back to 590x or even to 591x. Now this the candle, okay, because of this very heavy intraday reversal, the candle is indicating that on Monday, irrespective of any open, there will be an initial or intraday bullish movement, but a gap up open is not confirmed. Okay, just an initial or intraday bullish movement on Monday. Now let's analyze the last candle of the Dow Jones, last daily candle of the Dow Jones. Then again it's a bullish candle, and again this the intraday bullish movement, intraday very heavy, this is the bullish reversal. So the same initial or intraday bullish movement in the Dow Jones on Monday, irrespective of any open, but a gap up open is not confirmed. Now let's talk about the technicals. Through the technicals the picture will be very much clear, especially the MACD. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. Now, in terms of the technicals, S&P 500 is bullish through the moving averages on the daily chart. S&P 500 is bullish through the Bollinger Bands on the daily chart. S&P 500 is bullish through the Ichimoku cloud on the daily chart. S&P 500 is bearish through the MACD on the daily chart. S&P 500 is still holding bullish through the stochastic RSI, and if there comes no good green candle on Monday, then immediately the stochastic RSI will change to bearish. Now bearish stochastic RSI, bearish MACD, this indicates bearish side pressure, okay, and limits the bullish side movement. Means in the bullish side it will struggle, in the bearish side it can come down easily. Okay, so in this manner the S&P 500 will be seen or considered as 75% bullish or 80% bullish, you can say, on the daily chart. Okay, now let's analyze the Dow Jones, the technicals of the Dow Jones. Now here in case of the Dow Jones is bullish through the moving averages on the daily chart. Dow Jones is bullish through the Ichimoku cloud on the daily chart. Dow Jones is bullish through the Bollinger Bands on the daily chart. Okay, and the Dow Jones is bearish through the MACD on the daily chart, and the Dow Jones is still holding bullish but is at the junction of getting bearish, okay, through the stochastic RSI. All of this indicates that Dow Jones is also 75% bullish or 80% bullish on the daily chart. Okay, so what does this mean, 75% bullish or 80% bullish? Okay, and we have seen that the S&P 500 is neutral or in the bull side, or around 70% bullish on the weekly chart. Okay, all of this indicates that the S&P 500, the Dow Jones, and the entire US stock market is in a bullish condition wherein any fall is expected to be limited, and the S&P 500, Dow Jones, Nasdaq, or the entire US stock market can try to move up further. Okay, means bullish side is open, bearish side is also open but is limited. Okay, and both of these bullish and bearish side are limited or restricted by these heavy zones. In case of the S&P 500, this heavy zone is the confluence zone in the bull side, and in the bearish side this heavy zone is the zone that starts from 585x. Okay, as long as these two zones are there, means as long as S&P 500 is trading in between these two zones, it won't go neither bullish nor bearish. It will keep on oscillating, trading in between these two zones. That's it. Okay, we need two consecutive closings either above the confluence zone or below this, the heavy support zone, so that the bearish or the bullish movement can be seen, can be expected, or can be confirmed. Now guys, before I proceed further, let me tell you about this S&P 500 knowledge transfer program. Okay, so if you want to learn what I know, okay, what I have learned myself in last many years through my research and everything, if you also want to learn the same, okay, within 1 to 2 months, okay, then you can participate in this S&P 500 knowledge transfer program. So within 4 to 6 weeks or maximum 8 weeks, you'll be able to learn everything in a manner that for the years to come, you will become self-reliant and you will be able to trade all by yourself confidently and carefully. And recently, I've allowed the part payments in this program, in the S&P 500 knowledge transfer program. So what I'm going to cover, I will cover everything from basics to advanced, then the technical indicators. I will help you set up your charts, okay, with the modified values of the technical indicators. I will tell you all of the trading strategies, okay. You might know, so you might have heard about these trading strategies, but I will tell you these trading strategies in a very different manner that you might not have seen or heard of, okay. Then I will tell you how to analyze the stock market. Then I will teach you the options from basics to advanced, everything, including the options premium calculator and the live calculations through the options premium calculator. Then the support and resistance levels. Okay. So now that I've discussed, there is a confluence zone and then there is the heavy support zone. Okay. So these the zones are created by my levels. And if you're my Patreon community member or if you have subscribed to my YouTube channel, then you have seen the magic of these levels and the zones. Then the price prediction, how to predict the price, okay. So recently I have mentioned that 614x will be the all-time high in October 2024, okay, and in February we have seen that 6147 was the all-time high. Then the trend analysis, I will teach you how to analyze the trend, the short-term trend, the long-term trend, the daily trend, okay, each and everything. Then how to recognize the manipulation in the stock market, or how to convert the trap into the opportunity, okay. Then the stock market hacks, okay, that works almost 100% of the times with almost 100% certainty. And guys, this is my email address and these are some basic terms and conditions and these are the snapshots of the meetings. Guys, let me tell you one more thing, that the name is S&P 500 knowledge transfer program, okay, but whatever I am going to teach you here, it is applicable to the stocks, the indices, the crypto, the currencies, everything. So guys, whenever you want to participate in this program, then this is my email address, okay, or if you have any questions that you want to ask, then you can simply send me an email. And I've given the link to this Google spreadsheet in the description of the video and also in the comment section. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, means what is going to happen in the S&P 500 from June 2nd, which is Monday, through June 6th, that will be Friday. Now, next week will be kind of blank. That means some data will be released, but the most important data will be on Friday, on June 6th, when the unemployment data and the non-farm payroll data will be released. Okay, so in terms of the data, this is the only significant data that we can say that this data can impact the movement of the market. Otherwise, there is nothing in terms of earnings, okay, or data as such from Monday to Thursday. Okay, only on Friday this will be there. But again, let me remind you that the heavy fall as of now cannot happen, or any fall will be limited to the zone that starts from 585x, okay, or the S&P 500 will sustain or hold above this zone or in the bull side. Even if there comes a breach, then also it will be able to hold, okay, around this. The previous, that was the low was 5787, I guess, okay, slash 9x is my calculated level. So this creates a zone, okay, fall from this zone to this zone, okay. The only factor, the only factor that can trigger this heavy fall is or will be the president himself, okay, and that can happen only if he says something like something that triggers negative sentiments, okay, on the Wall Street, like that China, that he is going to withdraw, okay, or to cancel all of the negotiations with China, although there is a clear indication that he is going to do that, but he is going to do this and then he is going to impose, okay, these are same tariffs 100% or 150%. So see, as of now there was this confirmation or this clarity that he is not going to continue with the negotiations with China, but there is no clarity whether the tariffs, okay, that there was a pause for some time and the tariff will remain around 10% or 20%, that's it. But there, once there comes a clarity that the tariffs will be back to 100% or 150%, okay, then the market will fall extremely heavily. It will fall. Okay, but as long as this confirmation is not there, market can still speculate. Okay, so just one comment regarding the percentage, okay, tariffs, and that's it. Okay, that will change everything. But as long as this is not there, okay, as long as he is not saying anything bad, okay, rather saying something or everything supportive, okay, or neutral, then also that's fine. The market can sustain in a manner that 585x, okay, or the zone that is 5787/9x. That's it. Any fall, any kind of fall will be limited to these zones, specifically to the zone that starts from 585x. And once again, I have emphasized again and again every day, okay, whenever it was supposed to come down or whenever there was a possibility, okay. So again and again in these the updates to my Patreon community members, I mentioned that how this zone is going to play a very important role, okay, under what condition this zone will be considered as lost, okay, that there will be no recovery, okay, and under what conditions, okay, S&P 500 will be able to recover and sustain above the zone. All of these are conditions very clearly. So guys, if you also want to get these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, so far, if you have liked this video, this the S&P 500 technical analysis, then hit like to appreciate, and your appreciation matters a lot. This means this zone and this second zone, 5-8, the zone that starts from 5x, 585x. Again, let me tell you, this zone starts from 585x. It is not limited to 585x. Okay, and the second one is 5787/9x. Okay, 5787/9x. This will be the last bearish side support zone. Okay, this means that irrespective of anything, as long as the situation is under control, the situation is bad, but it is not worst. It is bad, but not worst. The fall will be handled by the zone that starts from 585x or the zone that starts or the zone that is 5787/9x. Okay, only and only if or when the S&P 500, okay, there comes very heavy bearish sentiments, okay, there will be very heavy fall. One more thing, that we do not need, we do not, the market, the Wall Street need not to wait for these are bad comments or these are any confusing comments from the president, okay, because the Wall Street can, because a heavy fall can still be triggered, okay, through the profit booking. So what kind of profit booking? Okay, this profit booking will be once there comes a closing below this zone. See, we need two consecutive closings below the zone that starts from 585x so that more pressure can be seen on the S&P 500, and because of that pressure, S&P 500 will be coming to 5787/9x. Fine. Once there comes one closing below this zone that starts from the zone that 5787/9x, then this single closing below the zone can trigger the stop losses. Okay, this the back to back trigger in the stop losses will be something like this. When there was the profit booking, this was 21st of May, back to back stop losses trigger, it came down, okay, tested the zone but failed to sustain and close, and then finally closed below the zone. Okay, so you need to understand this point. However, as I always say, we need two consecutive closings. Okay, and once there comes the second closing below this 5787/9x, then the S&P 500 will not wait for anything. Okay, then there will be fall and fall. Now this fall will be to what? That is the question. This fall will be to 564x. This is my calculated heavy support level, and earlier the S&P 500. Okay, not earlier, but there is still a technical obligation which must be fulfilled. Okay, it is still pending. Okay, so this is there. Now if the S&P 500 reaches to the 564x, okay, by Wednesday, okay, or at most by Thursday also, then the 5500 range will come into the picture. Okay, in that case only 5500, okay, the heavy support zone will be able to hold in the 5500 range. Okay, in this manner this the bearish side movement will work, fall will work. Okay, but again let me remind you that as long as the fall is up to this, the zone that starts from 585x, it sustains, closes above the zone, no more fall or no fall will happen. Rather it will get a bullish retrace, just like what I mentioned yesterday to my Patreon community members, that 1% intraday bullish retrace from this zone to 590x or to 591x is definitely possible. Okay, and this will be the maximum the S&P 500 can retrace if it sustains hourly closing basis, especially by 1:30 p.m. the candle that is going to form if the S&P 500 closes above the zone in my midday update to my Patreon community member. In that case in next 2 or 2.5 hours, 2.5 hours, okay, this 1% is fairly possible, right? This means that for those who want to buy, okay, for those who want to buy, they can expect an opportunity either here at this zone or at this zone. But remember, if the S&P 500 sustains at the zone that starts from 585x, fine, not a problem. Okay, you want to go bullish, you can go, but make sure guys you have calculated your profit and losses and you are using the stop loss. Fine, you can go. But once it comes down to this, the second zone that is 57879x, then be very careful. I will not advise to go bullish also. Okay, even if you are using stop loss. But if you still want to go, then I will advise you to use a tight stop loss around 3%, 2 to 3%. Okay, so this is the bearish side movement, right? Now, there is one more thing that we must understand. This is regarding the FOMC minutes. Okay, in the FOMC minutes of the meetings released on Wednesday, the Fed's, okay, the Federal Open Market Committee, okay, committee members are anticipating a recession to happen in next 6 months. Okay, means by November or December or before November or December, a recession is expected to happen. And this is not something speculative or something. Okay, or I'm saying this is based on the comments of the committee. Okay, these are members of the committee. Now who are the members of the committee? Okay, this includes the Federal Reserve Chairman, okay, and the regional Fed presidents. Okay, so they have their teams, and the team, okay, they calculate, they do the research, they compile the data, then they give that research or the document to the Fed, to the regional Fed presidents, okay, and to the Fed chairman. Then they look into it, calculate everything, and based on everything, based on their calculation, okay, they have come to this conclusion that in next 6 months, okay, a recession is expected or is anticipated. So the bearish side is clear. Now comes the bull side. Bull side will be limited and restricted to the confluence zone. And this confluence zone also includes my calculated level. Okay, that level comes in 597x. And the exact numbers of the confluence zone, okay, I mentioned to my Patreon community members again and again. So this means that any bullish side movement for now will be limited and restricted to the confluence zone. Okay, simple. Only and only if there comes two consecutive closings above the confluence zone, the bullish side will be open. Bullish side will be open in a manner that any fall will then be limited to the confluence zone itself, and the S&P 500 will be then heading to 6,000. And if all goes well, then in the 6147 towards the previous all-time high. But again, S&P 500 and the entire US stock market is now very pricey, very costly. Okay, so those who want to buy for the long term, Definitely, okay. As per my calculations, at per the movement of the stock market, not. Because if you notice, like Microsoft is around its all-time high, Goldman Sachs is around its all-time high. Okay, the stocks are around or above their all-time high or have built a new all-time high, especially in the conditions which are not favorable, where economy is shrinking, GDP is shrinking, everything is coming down. Okay, the profits are shrinking, everything is shrinking, yet the market is exceptionally bullish. So market is simply defying all of the facts. This indicates that now chances of recessions are extremely high, because otherwise the Wall Street will not take this much of risk. So what you can do is that notice the movement just before the very heavy fall in the month of February March 2020, COVID fall. Notice the movement. Wall Street knew something is bad is happening, but the Wall Street, the stock market was moving up and was building all time high. Okay, stocks were building all time high or around their all time high prices, but the Wall Street knew, everyone knew that there's the COVID-19. Okay, and because of the COVID-19, the lockdowns have started, situation is going to get worse, but still the Wall Street, the entire stock market was moving up, heavily up. Okay, they knew that there will be very heavy fall, and exactly the same was seen. And if you think that this is the only isolated incident, no, you can observe all of the recessions that have happened earlier. Okay, you will notice back in 2007, 2008, exactly the same was seen. It was moving up, and the economy started to shrink. Okay, things economy, so in the real economy, things started to turn bad. Okay, shrink and everything, but the Wall Street was moving up, the stock market was moving up. Wall Street was pushing the stock market higher and higher to build the trap, and then we have seen the recession. This happens generally when the recession is happen, and now the Feds have confirmed the same. Okay, that in the next 6 months, Feds are expecting a recession. Okay, this means that the unidirectional movement or the bullish movement, okay, it perfectly aligns that the Wall Street want to build. The big players, they want to build a very big trap, and then eventually 50 to 60% fall during the recession. There will be more clarity in the next FOMC meeting. But now, for now, this will the bearish side, bullish side heavily depend on the confluence zone. Otherwise, will be limited to the confluence zone. Fall will happen from the confluence zone. Above the confluence zone, S&P 500 is open to the all-time high 6147 all-time high. What will happen after 6147 if these the market manipulators, if they keep on pushing the market up and up, okay, to or beyond 6147, then no need to worry. 624 no 625x, I think 625x or something, okay, that is there. Okay, but whenever it happens, then I will tell you. So that is the second, okay, range, or you can say that 6250 or 40 or 60, okay, from where there will be the recession, the beginning of the recession will happen. This will come into the picture only and only if the S&P 500 manages to give two consecutive closings above the confluence zone, manages to enter into the 6000 range, okay, and is in a position or in a condition to move to 6147. But guys, if you are my Patreon community member, then you need not to worry about any recession, correction, or fall or high. No, because every day you are very well aware of these things. Okay. Now there is one more thing. This is the Dow Jones. Okay. So what is so special in the Dow Jones? This is the weekly chart of the Dow Jones. Now, if you notice, Dow Jones entered into the Ichimoku cloud, closed above the Ichimoku cloud, closed two consecutive closings within the cloud. Dow Jones is indicating that there is something not right, not good, not aligned to the reality. Okay, because if that would not have been the case, then the Dow Jones would have closed above the Ichimoku cloud. Because only if the index, okay, especially the index, if it closes above the Ichimoku cloud, and especially on the weekly chart, if it closes above the Ichimoku cloud, then there comes heavy bullish sentiments. Indicates that, okay, fine, the stock market can sustain. But in this case, two closings within the Ichimoku cloud. Okay, what does this mean? This means that if there comes a third closing, means the week of 2nd of June. If there comes a third closing within the Ichimoku cloud, the weekly closing, then in that case, I think the Wall Street will have to accept the reality and must be ready for a fall around a minimum of 5 to 7% fall. Okay, this can happen intra week, not a problem, but a closing will clear the picture. Also, once there comes a closing, one closing below the Chimoku cloud in the bearish side, okay, then also that will suffice, that will fulfill all of these the conditions. Okay, so in this manner, through the technicals, through the numbers, through the levels, through the zones, everything, okay, we can understand what is going to happen. Okay, so bullish side is expected to be normal or limited. Okay, bearish side is there. Market, the entire market, the S&P 500, Dow Jones, Nasdaq, entire US stock market, the worldwide markets are under pressure or are coming under pressure. Okay, but still they are trying to shrug off this the fear or the pressure, and I'm not sure for how long they can do this. But through the numbers we know that once there comes a closing above the Chimoku cloud weekly chart in the Dow Jones and two consecutive closings above the confluence zone of the S&P 500, in that case it will remain safe. Even if there is a pressure, then also it will remain safe. So guys, I hope this is clear. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then you can ask your questions through the comment section.